Hello, I am Pat Brockman from Munich Re's Special Case Unit. This training video will provide insight on what specific items found on a credit report are significant in financial underwriting. When reviewing a credit report on a case, an underwriter needs to realize that there is other significant information on the report besides just the credit summary. While it is important to make sure that the individual has a decent current payment history, an underwriter also needs to look closer at other aspects on the report. Credit reports can provide underwriters with valuable information that can greatly assist them in financially underwriting a case. Therefore, what important items can an underwriter glean from a credit report? The first important item that can be found on a credit report is verification of personal information. A credit report can verify the individual's social security number, address, date of birth, and possibly their employer. A credit report will also confirm if the individual has any collection accounts in their recent history. A collection is an attempted recovery of a past due credit obligation by a collection department or agency. It remains on your credit report for 7 years. Tax liens, both federal and state, are another item of importance that can be found on a credit report. It is a government's, both state and federal, legal claim against one's property when you neglect or fail to pay a tax debt. These can also remain on your credit report for up to 7 years. Another important item that can be discovered on your credit report is a civil judgment. It is a result of a civil court case. If you have owed money to a creditor and default on the obligation, the creditor can take you to civil court and obtain a civil judgment against you. This civil judgment can require you to make payments, get your wages garnished, or seek other ways of reimbursement. It can stay on your credit report for up to 10 years. A charged-off account is an important item that an underwriter should be aware of. It is where the balance on a credit obligation that a lender no longer expects to be repaid, normally more than 180 days past due, is written off as a bad debt. One of the most important items that an underwriter needs to be aware of on a credit report are bankruptcies. Bankruptcy is a legal proceeding involving a person or business that is unable to repay outstanding debts. All of the debtor's assets are measured and evaluated, whereupon some of the assets may be used to repay a portion of the outstanding debt. The two most common types of bankruptcy seen in underwriting are Chapter 7 and 13. A repossession is an item of significance that may be seen on a credit report. It is a legal process by which a lender takes possession of an asset, often an automobile, pledges collateral in case of borrower default. Due to the housing crisis in the past 10 years, underwriters may see a lot of foreclosures listed on a credit report. A foreclosure is a legal proceeding in which a bank can take possession of and sell a mortgage property when the borrower does not meet their contractual obligations. It remains on your credit report for 7 years. Lastly, an underwriter should review a credit report to see if a credit score has been obtained. If a credit score is available, a score of greater than 700 is considered to be a good score, and a score of less than 600 is a poor one. In conclusion, when you're underwriting a case in which you are on the fence, these items of significance may be the final piece to make your decision. If all of the aforementioned items are favorable, this may push you in favor of making an offer on the case. Conversely, if there are unfavorable items noted, you may want to take adverse action on this case. Thank you for your time today. We would love to hear from you. Please send questions or feedback to us at the email box on the screen.